What is smart investment? Some people may think that smart investment is possible only on the basis of a snug bank account, but even having much less, some thousands, or in some cases, some hundreds of dollars. To your credit, you can start investing successfully and get a proper profit in the nearest future using our Finance World app. Despite the amount of money you are going to invest, you should take into account some advice to stay in business. 1. Providing automated savings. The prudence and financial foresight is a required condition for a smart investment. Finance World app helps you calculate the amount of money to set aside monthly and to run it properly to gain financially soon. The app helps to put aside easily and painlessly. The principle of their work is rounding up transactions you make every day and setting aside money saved. You don't even feel this little difference between actual and rounded up sums from your car, but you will definitely see the bigger amount of money when you get it back in the long run. So the first rule of smart investment is to put aside some money you can afford painlessly to save on a regular basis and to use any financial application. For example, Finance World app for it. 2. Dealing with debts. An important step you should do before starting to save is discharging debts you already have at the moment. You can count yourself or with the Finance World app. The difference between carrying rates on your credit cards and your annual earnings, and make sure that the first devaluate the last, so it's reasonable to pay off all your high-interest debts, or at least the majority of them, before you start investing in order to get more than to lose as a result. 3. Don't forget about retirement. An important thing everyone should consider as early as possible is the amount of money to live on when you retire. It's reasonable to take advantage of your employer's offer, according to the retirement plan. It means that an employer contributes as much as you do, depending on your income, to his generosity. So always do your best to contribute the full amount of an employer's match, and not to lose money in the future. Moreover, there is a real chance of money you contributed will grow throughout the years, and your profit will be essential. 4. Minimizing investment fees. Smart investment supposes minimal investment fees. In spite of its type, you may deal with any fund, bank account, or some other financial organization or tool. In any case, try to avoid fixed fees, especially if you invest a limited amount of money. Besides, always compare returns of your investing and risks you take and prefer less risky campaigns. In this respect, you may choose between lending your money to a bank by buying a certificate of deposit dividend reinvestment plan, buying shares of stock, participating in an exchange, traded fund or mutual fund, investing in peer lending, a low-fee target, date fund, buying individual, stock shares, investing in real estate. The principles of smart investment are rather simple. Saving regularly certain amounts of money, match an employer's contributions, choose smaller fees and taxes, and invest reasonably if your finances are limited, and use helpful virtual assistants like Finance World.